Welcome. My name is Aaron Engelman from Two Teachers Tax Service here in Lyman, South Carolina. Today, we're going to talk about self-employed automobile deduction. If you use a vehicle for business as a self-employed taxpayer, you may deduct automobile expenses. There's two IRS-approved methods to do this. There's the standard mileage rate and the actual expenses method. To claim the self-employed automobile deduction, you must be self-employed. W-2 employees are not eligible. Travel must be between work locations, client meetings, and business errands. Commuting from home to a regular office is not deductible, and you must keep detailed records such as a mileage log. The standard mileage rate method takes your business miles and multiplies it by the IRS rate. For 2025, that rate is 70 cents per mile. This is a simple calculation. Other deductions when taking the standard mileage deduction that you can use are parking fees, tolls, interest on a car loan, and property tax on that car. The actual expense method is a little more complex. You track all costs and deduct the business use percentage of those costs. Your expenses include gasoline and oil, repairs, tires, insurance and registration, and depreciation. So for example, if you have 60% business use, you deduct 60% of all of those expenses. So let's compare the methods. The calculation for the standard mileage is miles times IRS rate. For the actual expense method, it's business percentage times actual costs. The record keeping for standard mileage is the mileage log only. For the actual expense method, it's receipts plus your mileage log. Depreciation is built into the standard mileage rate, but it's calculated separately for actual expenses. The simplicity is high for standard mileage, and the simplicity is very low for actual expenses. And you may want to claim standard mileage for high mileage, simple returns, and you may want to claim actual expenses for high expense vehicles. Can you choose and switch methods? Well, we use the year one rule. If in year one, the standard mileage rate method is selected, you cannot switch to actual expenses for that vehicle. Using actual expenses in year one keeps the option of switching to the standard mileage later if straight line depreciation is used. Your best practice is to calculate both to see which yields the biggest deduction. You must keep accurate, contemporaneous mileage logs. Consider using mobile apps or manual logbooks. Remember, this is not for W-2 employees. Two Teachers Tax Service will help you with your automobile deduction and determine the method which results in the lowest tax for you. Contact us at 269-449-8277 or by email at twoteacherstax@gmail.com. Thank you.